Hi guys, and welcome to another video. In this video, this is the second video actually of how to use or how to follow up our signals or how to execute the signals basically. You can call it whatever you want. So in this video, I'm giving you another example. It's a different example than the first one. So this is another signal that we send in our group. And this is an example of how it looks like, okay? So getting started, I guess you already remember what I said from the last video. But in this video, I will be explaining you something like most or more advanced of how to use your capital and how to risk. So most of you have some questions about how will be my risk if I'm using 0.02 and how much it will be my risk if I'm using 0.10. What's the difference? So that's some of the most questionable questions that most people has, and you need to take very careful because depending on the size of your account, if you have $100, it's not the same as someone who has $500. So that means the guy who has $100 is more limited to use his cash or to use his trades into compared to someone who has $500 or $1,000. Each one of those guys, he will get a different return depending on the risk that he will be playing with. So basically, if you have $100, I will be asking you to use 0.01, sorry, or 0.03 as a lot size. If you are using 500 or you're using something in between, so you can compare and have a little bit of idea. So you can get started with 0.02, the first position that you trade with, and the next positions that you try to add or some of the positions that you try to follow up, you can use this other different lot size. So in that scenario, I have those two examples. You can imagine with 350 what it should be. Let's say it will be from a 0.02, okay, till 0.05 or 0.6, okay. This is the lot size that you'll be using depending on the different accounts that you have, okay. So let's get started. First thing first is what you're gonna do if you see something like this and you see the graph looking like this, okay. So let's say we have this trade actually running. Okay, I'm gonna put you an example. So we are trying to buy this area here, okay. And actually what just happened, the price is not at our entry, is a little bit lower than that. So what that means for you, this is a very interesting thing. So that means you are better than the guy who's buying at this price. So we are buying at 114,900, and let's say the price is at 114,700. So that means you are 20 pips above or below, sorry, below the guy who's buying, because we are trying to buy, okay, the CHF versus the yen. So we are buying the CHF versus the yen, and this is the price of entry. This is the moment that I entered for myself, and this is the moment that I send a signal for you guys to follow up. The problem is the trade, instead of going upwards, he started to go down, so we are losing 20 pips in negative, okay. So that means for you, you will be entering into a different zone where the risk is lower than the first guy. So in that scenario, you can add a very higher lot size than what you will be adding at this price here. So that means, basically, let me explain. If the price is dropping, or we want for a sell, and the price is above the price that we are looking for a sell, okay, so let's say this is the stop loss area, okay, the guy who's entering here, okay, is losing more money till here than you if you are entering here, and the stop loss is here. So basically your risk is very small, and the guy who entered in the first position has a higher risk than you. So that means you can enter, instead of a 0.02 as a first position, you can go, let's say, for example, a 0.04, okay, because you already are getting 20 pips as extra, because also if the price starts to go up from this level here, you'll be making 20 pips extra than the rest of the group. So that means you are making more money in cash than the rest of people. Okay, so now let's jump and let's check out where is the CHF versus the yen. Let me try to find it. We don't have it in the list, I think. CHF yen, we don't have it, so we can go here and write CHF GPY. Okay, we search in this list and now we have it. Now we go back, we're gonna go all the way down and we're gonna click CHF versus the yen, new trade. We see that the price is 114,900. Okay, but the price actually is at 850. So that means we are a little bit below than the price entry. So we are 5 pips below the guy who just buy it. So if we are in 5 pips below, that doesn't mean we need to use 0.04 because we are only 5 pips. I'm talking if you are watching this trade with 20 pips as a difference. That's a big game. So right now we will not use 0.01. We will be using 0.02 and it's a buy position. So we're gonna put the first take profit 114,852 and the stop loss is actually 114,300. Okay, and now what we have to do is we're gonna buy, okay, because we're not looking for sells. Even if we are wrong in this number and we say this scenario, okay, and we want to buy, it will never work because we are putting the number, the things not right. Okay, so we're gonna click again here. We're gonna go back. We're gonna say we want to buy. The numbers is actually for the first take profit. Okay, is 114,852. Okay, and in that scenario is 114,300. That also will not work because the number for the take profit one is also okay, is also wrong because we are trying to buy something that's above. So that means the signal, it will not work, okay? So what we have to do is we're gonna check if everything is right, okay? And then we're gonna jump into the trade. So in that scenario, we're gonna go for the take profit 2 and the take profit 3 to let you know the example. So in that scenario is take profit 2, 1992 and 115,300. So 1992, okay? And the stop loss will remain the same. So in that scenario, we're going to click on buy, okay? And the order is already opened. Okay, so right now we have the position already opened, depending on the lot size that you have in risk. So now I will be talking to you about the risk management, okay? So we go back in the screen, we try to find out where is memo. Let me show you. How we can exit from this. Okay, so now we are here. So we're gonna click on Steno. This is the app that I told you about to get it. So you click on Steno. Okay, and now we're gonna put the account balance. So the account balance is $100, let's say, and we want to risk 5% in this scenario. The stop loss is too high, so between 114,900 to 114,300, there is 50 pips in difference. So we calculate that, and there's that 15 pips in difference between this number to this number is what we put normally in this app. Okay, so in this scenario is 15 pips. We will search the currency pair. So in that scenario is CHF versus the yen, and we're gonna click calculate. It will give us the risk amount that we're gonna use. This is the risk amount. That means if we lose this trade, we're gonna lose only $5, but we have to use 0.01. What happens if we use higher than that? What happens if we use if we want to take more risks? Let's say we want to take 7% of the risk. Okay, we select again here, we select the pair and we click calculate. It will give us a different number. But what we need to look at is not that number. What we need to look at most of the times is only these numbers here, okay? Only these numbers that we have 0.01. These last numbers are not important, okay? They are not they are not important at all, so we don't need them, okay? So we're gonna only trade from the last number, and let's say this has never existed or never exists, okay? So 0.01 is the position that we need to look to take, okay? If the risk is too small for you, you think it's not that much for you, you can basically go back and changing the risk amount. So you can put 10% and repeat the same scenario, okay? CHF, GPY, calculate. It will give you now $10, okay, 0.02. So right now we are using almost $10 of risk in that position that I just showed you on the MetaTrader 4 app, okay? So now we go back, we will see what happens. The CHF is still in negative, so that means the trade is not really getting to any side. So we need to hold on till he gets till the take profit 1 or take profit 2. So now let's say we say to everybody to close partial trades, or how to close partial trades. That's very simple. What you need to do is only you have to click, but maintain the click, not just clicking. Okay, this is click, and this is maintain the click, and then it will open you this window. So in this window, you're gonna click on close order. It will not close automatically. It will ask you for some stuff. So don't worry if you click on close order, okay? So you're gonna select this option, close order. After that, we're gonna do is we're gonna go all the way up in the middle of this. We're gonna change the 0.02 into a 0.01, and we want to take just a small amount of that trade. Let's say it's some positive, because I'm trying to do a small example here. Let's say this is on positive, and you are making, let's say a number, you're making $3, okay? And you think that $3 is really enough for you, so those $3 are fine, okay? So you're gonna close half of it. So when you're closing 0.02 into 0.01, that means you just close it at 0.01 position, which is half of $3. So $3, the half of this actually is $1.5 profit. What happens with the other 1.5 trade open? The other part of the trade, it will be still open with the $1.5. And if the trade keeps going upwards, or for a sell, in this scenario it's a buy. So let's say we are buying and the price keeps rising and rising, this 1.5, it will be changing to $2 to $3 in the future, but we at least have $1.5 in our pocket. I'm just giving you small examples, small amounts, okay? The last example I said 30, but in this scenario, I'm talking about a small amount when you have only $100 account is what I'm doing in the example in this video. So when you have the amount that is ready, so we only have to change this number. We said from 0.02, we want to go for a 0.01. We take half of the loss. You'll see how the number changes when I'm putting the 2. Now look what happens, okay? So half of that, okay? And now we're gonna close this. Closed, ready, okay, done. It's already done. Where is the trade actually? You go back here, and here is the trade, okay? This is the trade that we closed, 0.57 plus 0.04 of the commission, because we are losing also this amount, okay? So now the trade is closed. We don't have any of the trades open. So let's say, for example, the trade is really getting better, and you are making those $3 that I've been talking you about. The only thing you need to do is protect yourself. When you're talking about protecting yourself, is when actually the trade is dropping so hard, okay, and our take stop loss is still here, but actually the trade is dropping so hard. So you think this stop loss, if this trades whatever he decides to do in the future to go up, you don't want to hit the stop loss, okay? So what you're gonna do is you're gonna change the number of stop loss, which is 114,300. Okay, you're gonna change this number, and you will change it with the price entry. Let's say you didn't enter it at 114,900. You enter it at 114,850 as an example, as the number that we enter. So we're gonna change that number into the number that we entered for. So we change the stop loss into break-even. Break-even means if the price, whatever he decides to do in the future, it will hit this level here, and you may make $0.0. Okay, you will be making 0. Okay, and this number maybe you was making 5, but you think that you can make 11, but also you don't want to lose anything, so you move your stop loss to break even. This is basically what it means that. So we go back, we're gonna select the trade, we maintain the trade, okay, we maintain the click, we modify the order, and we're gonna change the stop loss, not the take profit, the stop loss, the red area. We're gonna click here, and we're gonna say we want the trade to go back to where it was. So we was buying, okay, and the number is 114,850, the price entry. In this scenario, we cannot change it, okay? But let's say our entry was 114,780. So our stop loss, it will be 114,700, let's say, was the number of entry, okay? So you put 700, you click on modify. So your order is already modified. And if the price starts to go into the opposite direction, you will be losing $0 and making $0. So with that way, you have your position closed into a break even, okay? So let's say another example. Let's say you want to trade this trade, but instead of coming 20 pips late and 20 pips in your favor, okay, let's put the same example. Okay, so this is the buy position we want. Instead of the price being in this level, he's not at that level, he's actually at this level. So the trade means is already in positive pips. What is the risk that you need to use in that scenario? Let's say, for example, you're always using 0.04 normally. But in that scenario, instead of using 0.04 because you are late and the trade is going already in positive, you're late. So in that scenario, what you need to do is you need to change your 0.04 position because you're late into a 0.02 position. Why I'm telling you that? Because when you're late into a trade, that means the traders that they are already inside, and this one is already getting into 20 pips profit and is almost hitting take profit 1. That means you have no time as before. So you need to take the trade, okay, but instead of the same risk that normally you're using, you're gonna use the half of that risk, because you know that if you enter here, your stop loss is here, but actually you need to know this stop loss was 40 pips maybe, okay, but you need to say, okay, I have this 20 stop loss also added to my number, okay, so now you have 60 pips stop loss, okay. Hope you get me in this part, because it's very important, and most of people doesn't know that. So basically your risk is higher than the guy who entered here, because he only gonna lose 40, but you came up late, so you're gonna lose 60 because it's already 20 pips in positive, and maybe this guy already moved his stop loss into break even, so he will not lose anything, and you will be losing more than anybody else. So when the risk is higher, your risk of exposition is also higher. So what you need to do is use half of your position, or instead of getting into the position with the higher risk that you was trying to do before. Okay, so with that way, you are using a great risk management, and even when you're late, you still can take the trade, but with a different lot size, okay? So in the other option, I told you, if you are, instead of late, you're so lucky to get into a better position than the rest of people, your stop loss is so low, but the guy who entered here has a bigger stop loss. So in that scenario, you can enter with a higher lot size than the rest, because you came up after the rest of people, and when you came up after the rest of people, the signal is even better for you in your side, okay? So in that scenario, you can use a higher lot size. And if the trade is not, it doesn't have that 20 pips difference, you'll be using your normal lot size as always, okay? So never change that, and make sure you understand this part, because if you don't understand it, I will be explaining more in depth in the next video, okay? So I will be seeing in the next video with you guys. Hope you enjoyed this video.